Yeah, got
Okay,
it.
you're recording now. Okay, perfect. Are you gonna be sharing your screen or it's just your face?
Just our face. We're just gonna talk.
Okay, perfect. Okay, awesome.
And then, I think
So if you
everybody's
want,
basically.
we'll wait like 2 more minutes just to make sure everyone gets in, and then you can get started. Okay.
Yeah, perfect.
Thank you.
You're welcome.
Good morning.
Good morning.
If I wanted to do the Zoom on my laptop, what is the meeting ID number?
We'll send it in the chat.
Okay.
Yeah. Give me 1 second.
I'd rather do it on my laptop than on my cell.
No, I feel you.
Okay, thank you.
You're welcome. Copy.
Oops, I lost her.
Let's see. It's 27. That's it. Alicia, let me know if you want to get started. I think there's only like 26, 27 people. I haven't really seen it go up or down. So
No, that's fine. You could get started now. Thank you.
Okay, perfect. Good morning, everyone. I know it's early. Credit is not the most funnest topic to be talking about this early in the morning, but we'll try to make it as interactive and simple and educational as possible. So before we begin, my mentor always taught me that we should always show gratitude for every little thing that we've been offered, all the blessings and the opportunity to be able to be on here to talk to you guys and you to as realtors to show houses to your clients. So this little exercise I like to do with all my Zoom meetings is to find 3 people that you want to send a text message to. It could be very simple, short and sweet, and just tell them that you're grateful for them. All right. So I'll give you like a second to just do that. But yes, I like to express my sense of gratitude to you guys that we're able to have this opportunity and talk to you about credit and educate you guys a little bit about what we do and our process, and then how we can help you guys kind of educate your clients if they have any questions to ask and whatnot. All right. So I think everybody's probably sent their little messages out by now. And we'll get right into it. So my name is Jessica Suarez. Me and my little cousin, we started Suarez Credit Solutions. I was presented this opportunity actually by a friend of mine, an old school friend of mine, to join a company and start credit restoration. And sure enough, we kind of didn't really like the way the company was running. So her and I decided to open up our own company and do it ourselves and be more of a boutique service for our clients. So it's a very personalized situation. Let me put her on the line really quick so she could kind of do a quick introduction about herself.
Hey
Janessa.
guys, my name is Janessa. As Jesse mentioned, I'm her little cousin. She actually presented me the opportunity during COVID. I used to be in the whole like promo business and I wasn't really making any money. And she spoke to me about this credit opportunity. And although I was kind of like on the fence about it, the more I started learning about credit, it was actually one of those things that I didn't know I was passionate about until I continued to learn. Um, and you know, her and I were so passionate about it together, and as she mentioned as well, that we weren't really liking the way the other company was running, and we kept getting a lot of like negative feedback from our clients with that company. So we kind of took matters into our own hands, and we were like, okay, what can we do to better the system and to make more people feel comfortable throughout this whole process? And you know, if people are going to be paying for a service, they're going to kind of want you to do like all the stressful work. So that's kind of how we do and how we run the business. We do everything for our clients on their behalf. And, you know, we just kind of alleviate the stress that comes with, you know, reading a credit report and all that jazz. But we, you know, we really like to educate all our clients throughout this process. It's not just us doing the work. You know, we're constantly keeping them updated with everything, and we show them how to read a credit report, things that sound simple but a lot of people don't know. And so yeah, that's basically it. um
We also have like, we have to understand the clients that we're getting don't really know how to handle their finances. That's why they're in the situation, whether it was because you were young and dumb or you just lacked the information about handling your credit and credit cards and all of that. We also have to realize who we're getting as a client, and we have to give them the proper information, because when they want to buy a house, they have to understand that they can't be doing certain things, and they have to build up their credit, or they have to figure out what they need in order to establish everything for you guys to finish your process in buying them their dream home. So after much research with talking to a bunch of realtors for this class, the biggest questions that we were asked, like, we get that the mortgage brokers are the ones that really do handle the credit, but you are going to come across clients that trust you and that they're going to open up to you and talk to you about their credit and their finances, and they're going to ask you for their advice, because you're the ones buying, like, helping them find a dream home. So you're going to have a very close relationship with them. So I'll have Janessa kind of go through all the questions that we kind of asked other realtors, and we think these are going to be beneficial for you, and it'll help you kind of maintain that relationship with your client a little bit more, and basically go off of like what we like to do, give a boutique kind of service to our clients. All right, Mimi.
okay, so the top 3 questions that we got asked, the first one is, you know, after making a decision to want to start looking for a home, what steps should be taken to start preparing for your credit? So basically, what are the things that they need to look for in order to know whether or not they qualify to even purchase a home? So obviously, first you would ask them to pull their report, and this is not a hard pull. This is something that you can, you know, you can get off any of the 3 major credit bureaus websites, and or even annual or freeannualcreditreport.com as well. They also allow you to pull the 3 credit reports from all 3 credit bureaus. So because with things like Credit Karma and Credit Sesame, they only show 2 out of the 3. And I've noticed a lot that although Credit Karma shows 2 out of 3, there's a lot of negatives that are showing in the other credit bureaus that the clients are actually not even aware of. So that's why it's important that they see all 3 credit bureaus reports. And the main things that you should be checking for is misinformation. And what that means is that when they go through their credit report, are their names spelled correctly? Are their addresses up to date? Because a lot of those things are tied into their negative marks if they have any. And if they're able to remove that, you know, incorrect name or incorrect address, it's all a system. So when that's removed, the negative that's connected to it will be removed as well. So that's why that's super important to look at the information that's showing on your credit report. And of course, there's a lot of other details, but that's where we come in and kind of, you know, guide them as to what other factors that they need to be looking into, whether it's account numbers, the balance being reported, the active dates, payment dates, and everything else. The second one is, what's the most impactful thing that can affect your score? So your credit score is made up by 5 factors, and the top 2 is your payment history and your credit utilization. That right there makes up 65% of your credit score. And if they don't have excellent payment history, and if they're not spending responsibly, then they're going to see a significant decrease in their score. So those are the top 2 things that we like to emphasize on, and that they need to be the most on top of, because if you go from having 10% credit utilization and you jump the next month to 30%, you're going to see a significant decrease in points in your score. So that, to me, I would assume is that, not assume, but know that those are the 2 most impactful things from your credit score. And then the do's and don'ts through the pre-approval process, which I'm sure many of you are aware of, especially if you're close to working with mortgage brokers. But a lot of things that realtors should know as well is that their client shouldn't be purchasing a car or making any big purchases, because things like that will affect their debt to income ratio. And you also want to make sure that your clients aren't missing any payments and that they're paying off all their bills, because when they pull their credit report, they're going to see, okay, well, you still have an outstanding balance on this card, on that card, and they're going to make them pay it anyways. So it's important that these clients are paying their statement balances at the end of each month, so that there's not an outstanding balance showing. And lastly, it's also very important for your client not to be switching jobs, because if they're making a certain amount of income, with one job, and that's where, when they did the pre-approval, that's what it shows, the income that they're making, and then they decide to switch on another job, that's not valid anymore, because that income is not going to be the same unless you obviously choose a job that that you make exactly the same. But those are the top 3. We feel like, and again, we'd like to emphasize, we know that the mortgage brokers do deal with majority of the whole credit situation, but it's always important to know at least the basics of it, because if your client does have a question, it's good to know the answer to it, or have some sort of education behind the whole, credit report and things like that. And if the mortgage broker does talk to you and tell you, okay, well, this person needs to work on X, Y, and Z, you at least have some sort of idea of what they're talking about and how to kind of guide your client into the right direction. So those are the top 3. We wanted to kind of leave the floor for you guys to ask questions when it comes to credit. It can be, a question that you would like to know personally, or a question that you may get asked a lot by your clients that we may not be aware of. So if you have any questions, do you want to open the floor, Jess?
Yeah, absolutely.
Okay.
So
you guys can either, you can unmute yourself, or you can put it on the chat box, whatever you feel is more comfortable for you.
So one question is, what are your recommended free credit check services? So for us, we like to use annual credit report. We also, our company personally works with 2 other companies that do check it. We do have like a free trial, like a $1 trial thing that you can give your client, and then it shows them all 3 credit reports and the most up-to-date information that they can possibly have on there. And then all it is just basically letting them sign up, and then it just can't, and then just having them cancel it right when they look at all 3 of their reports. So annual credit report is definitely one of them. There's another one that shows you your FICO score. I believe it's FICO.org or FICO.com. They'll get their FICO score, because I know with the pre-approval processes and trying to buy homes and even cars, they go through a different risk solution company called LexisNexis. So LexisNexis also has a free pool as well, so your client can do that. It's just basically LexisNexis.com, and they can just put their information, and just like free annual credit report, they can pull that report as well. So those are basically our top 3. So Smart Credit, you can do Identity IQ, the free annual credit report, and then the LexisNexis. Let me see the chat. Trying to find the chat again.
So with Credit Karma, 'cause someone's asking what about Credit Karma. So with Credit Karma,
Okay.
like I was saying before, it only shows 2 out of the 3 credit bureaus. So you may be perfectly clean on TransUnion and Equifax, but there might be something on the Experian credit bureau that you're not aware of that might be showing negatively on your credit report. So that's why we don't really recommend Credit Karma. We know everyone has it. I personally have it. So it's definitely something that's very common and popular, and people really know how to navigate through it. But again, it just doesn't show all 3 credit bureaus. So that's kind of where, why we don't recommend it. So.
Oh, okay, I did have a question.
Okay, go ahead.
I know you said that if their credit utilization increase, I know the credit score would go down within the next month. But what about when they're trying to get it back on track and they paying their bills off, and let's say they paid it all off, will it go back up just as quickly?
Actually, there is a little hack that I can let you know, so you can let your clients know. So when you're trying to pay off your entire credit card and then you want it to go the most quickly as possible to report that 0 balance, just basically have them call the credit card company and tell them they lost the card. And then once they do that, they're going to reissue you an account number with the credit card. So they basically have to reset that account and it'll show you the 0 balance at that point. So that'll be the fastest way for your client to actually have that reporting on their report.
Oh, okay. Thank you.
You're welcome.
And just to piggyback off that question,
Yeah.
with the utilization, let's say you don't want to go that route. You can always, again, this is just like my personal experiences, and see that things that have worked with our clients as well. If you do, as you were saying, so if they are using more than they're supposed to the month after, will it go up as quickly as it came down the following month if they do reset it to a smaller percentage? And yes, I've exceeded my 30% 1 month for whatever personal reasons, and when the following month, if I put my credit utilization back at 6%, I'll see a 20-30 increase in my score. So it's definitely, if it's a drastic change, you'll see a drastic increase, and if it's a smaller change, then you will still see an increase. It just won't be as effective. So definitely, if you're going from 30% to 10% credit utilization, you're going to see a significant increase in your score.
I have a question. If for whatever reason my credit score dropped a couple points and I haven't really opened any accounts or requested any loans, what would you say the reason might be, or how could I even find out?
Okay. Usually when that happens and you haven't applied for anything, it would always come down to possibly, if you're looking at it through Credit Karma will definitely start showing things at different times. So maybe a month or 45 days ago, you'd applied for something, or maybe at that point, your credit card utilization was higher. So what that happens, since it's not always reporting at a specific date and time, that's why there's always fluctuation. So maybe you didn't do anything for a month or 45 or even 2 months, and you're like, what's going on? It's probably showing from something past that might have happened, or something you might have applied for, or your utilization was higher at that point. So that's usually those indiscrepancies that happen with your credit report and credit reporting. And that's why, again, that's why we really don't like using Credit Karma, because that's one of the biggest issues that we constantly see. Our clients are like, oh, well, my credit, I haven't done anything, so why is my credit going down? And it's probably just because it's a late reporting on their end.
Yeah, and
Okay.
also, sorry, I didn't mean to cut you off. Did you have another question?
No, I
Okay.
did, but go ahead.
Okay,
It's
no,
about
what I was
something
gonna,
else.
Okay, no, what I was gonna say is that, and if you don't, and I'm sure you've noticed this because we get this all the time, like, why are my scores so different? So all three credit bureaus work independently, and one thing that I also like to say is that there are some accounts that will be reflecting on your TransUnion account, but won't show on your Equifax and Experian. So that can also be a factor as well, why you may have seen a decrease in your score in one bureau than the other. There's so many different factors, hence why we always like to like look over it and kind of go through it, and especially with all three credit bureaus, just so we can compare to make sure that, okay, are all these accounts showing on all three credit bureaus? You know, are they all reporting the same balance? Like all these different factors, but the main ones, like Jesse just also said, is that, you know, is your credit utilization where it needs to be? Because that's usually the biggest factor. But yeah, I just wanted to say that little that little thing. And then I see here that Lucas Pelaez put, is there any way you can delete a late payment that is affecting your credit score? So, you know, late payments are, we can definitely dispute them. It just does take a lot of time. It's a very tedious process. It also depends on how many you have. If you have one or two, it's kind of easier, especially during, you know, COVID. But it's definitely possible to dispute it. We would just have to, we can, if you want, we can speak after this and we can go over your options on how to dispute that. And we can kind of guide you on, you know, a goodwill adjustment letter or calling the creditor and kind of asking them about options on how to remove that late payment due to X, Y, and Z reasons. So I hope that answered that question.
And then I see Kelly King, she's asking what's the average credit score range to be approved for lending? Kelly, can you be a little more specific? Lending in terms of a house, a credit card, a personal loan?
Yeah, sorry, I just realized I should probably be
okay.
a little more specific. No, I mean, so really just if I'm on the phone with a client and they're asking like very preliminary questions, where should I be as far as my credit score in order to purchase a home? What should be a good average range that I should give them?
So from us speaking to other realtors, they were saying for like FHA and VA loans, a 580 is basically the lowest I think you can go. But I would say the safest would be anywhere like from a 680 to a 720 is possibly like the range you would really want to look for. And if the client wants a better interest rate, of course, you know, so it all depends. The higher your score, the better the interest rate will be. And then also if they're going to be doing a joint loan with like their spouse or a friend or a family member, they also have to realize that both of them need to have a good credit score, because they will take the average of the 3 scores from both of you, and whoever has the lowest, that's the one that they're going to take. So that's always definitely something to advise them if they're going to be doing a joint loan, that they will take the lowest average of the 2 people.
Got it. Okay, that's very helpful. Thank you.
You're welcome.
No problem.
After the client pays a debt, how long does it typically take for it to reflect or update on their credit score?
Usually anywhere between 30 to 45 days. That's usually the rule of thumb for that. And then like I was telling Ben, I believe it was, who asked the question about the credit card. Like I said, you can still tell them to do the same exact little hack, and tell them to call the credit card and tell them, hey, I lost the card. Can you please issue me a new one? And it'll reset and it'll reflect faster on their credit card, on their credit report.
Awesome. Another question. I've always been told that it's better to not cancel your credit cards and just let them, you know, be canceled by the company. What do you guys think about that?
That is a good advice that they gave you. You should never close old accounts. The only time I tell clients close old accounts is if those old accounts are linked to multiple late payments. So if they have a lot of late payments on that closed account, regardless of the history, I say close it, find a way to close it and get it off of your report, because the late payments are hurting you more than actually obtaining that history that you're holding on to. So if it's a 20 your credit card, they're still going to take the average of your entire credit history. So if you're just eliminating that 20 years, we can always find ways to build your history back up, whether it's you become an authorized user on another credit card. If you can also get like trade lines as well to help with the credit history. So I tell clients, don't be set on your credit history, because that can always be fixed, and that could always be fixed easy. It's an easy fix. But the late payments, that's not an easy fix. It's actually a harder fix. And then so definitely that's something I always tell clients. If it's a closed account linked to late payments, completely remove it from the report, because it's hurting you more than it's helping you.
Awesome. Thank you.
You're welcome. Let me see.
I've been
Answering. Okay.
responding back, yeah, on the chat. Just
Perfect, because I
while
keep
you're
going back and
talking,
forth
yeah.
just in
No,
case.
yeah. I got you.
Okay. And Amarilis, we don't have an office. We work independently, so we kind of either go to you or we kind of meet up somewhere, at least for now.
Or we can do Zoom, like what we're doing now.
Do you guys, I don't know if you guys posted it, but okay, you said your fees vary depending on consultation and credit analysis.
Yeah. So we do offer 3 different packages. It all depends on the type of negative items that they're showing on their credit report. You can find that all on our website, which I'm actually going to put here too. And basically, all the information is there. They can sign up for a free consultation. They'll be able to see all our different packages and basically how our process works. And if they had any questions, our number's there, our email's there. So yeah, we're a very small business. And as Jesse said too, it's like we're a boutique style credit restoration company, just because we do believe quality over quantity. We like to have a very personalized relationship with each one of our clients, because a lot of people that I have come across when it comes to credit, they're very embarrassed to talk about it, or they're even embarrassed to look at their credit report. And we don't want people to feel that way. We want this to be like a safe space, no judgment. We want to help you get in that right direction. And, that's just kind of the space we like to provide. And we always keep our clients in the loop. We're very transparent. We also have a client portal system, which is nice because they're always able to kind of log on there. They can communicate with us on there and just check on their progress as it goes. They're always notified with everything. And we also want to mention that anyone that you guys do send to us, we will 100% make sure that they go back to you. Just make sure that they let us know, the realtor and your contact info, or if you want to reach out and say, hey, just letting you know that we sent, this person to you, please keep me posted on their progress. That way, whatever it is that you would like, we love to work with everyone and make sure that the clients that you are giving us are going back to you. So I did want to say that.
Guys, what's the average? I know it all depends on the client and like how fast they make the payments, but what would you say the average is for someone that comes, to fix their credit? Like, would you say like 6 months typically?
So I would say, again, like you just said, yes, it varies on what they have, but the average client can stay with us from 6 to 12 months. And it varies. And the reason why I say that is because you're going to have clients that are doing everything that they need to do throughout the process. And what do I mean by that? That they're not applying for anything throughout the process. They're not making any, they don't have any missed payments. They're spending responsibly. And, that's the clients like that will have a quicker turnaround. But and then you do have others that you can't get a hold of them. You see a new late payment on their credit report. And it does take longer. So by law though, when we send out the dispute letters, the credit bureaus have 30 days to respond. So that's kind of like where the hold process starts, is because when we send something out, now it's 30 days to wait. And then now we have to get in contact with the client. If they don't get in contact with us, whether or not a response has been received, through the mail. And then based on those responses, we'll be able to know how to respond back with what dispute letter. So that's why it's kind of a tedious process. But again, the average customer, depending on the different factors, can be with us 6 to 12 months.
Awesome. I have another question. Would you guys say, at this point, is it better to kind of negotiate when it's already at the collection company or when it's still at the actual company?
Okay, Janice, you want to take that one or me?
Oh, it doesn't matter. If I
So-
want to add anything, I will.
Okay, so when it comes to the collections, it's not a tricky situation, but it's one of these things that it benefits you, your client, whoever has the collection. You have to figure out what collection is it. Collections are basically accounts that are bought on pennies on a dollar. They're buying their account books. So let's say Chase sells their books to, I don't know, Calvary, which is just a collection agency that I see so often. I just kind of know the name. They sell it to them. They're basically hired to just call you, harass you, everything just to collect that debt. 9 out of 10 times, these clients or our clients don't. Okay, the collection agency doesn't have the verifiable information to link you to that account. That's why they're constantly harassing you. That's why they're constantly calling you just to find out, just to get you on the phone to admit to anything so that they can say, oh, okay, this is your debt. So when it comes to collections, I tell my clients, do not even answer the phone. Let us handle the collection situation, because if they can't validate that account, whether it's yours or not, they can't validate it, you don't basically owe them anything. However, when it comes to a charged off account is still owned by the original lender. So if you have a charged off Chase account for $5,000, Chase still owns that account. So they have all the verifiable information that they need to link you to that account because it's still in their system. So when a client comes to me with charge offs, I tell them it's 50-50 that it's going to come off of your report. But at the end of the day, you still owe that debt in terms of the charge off. So I always tell clients, look, I don't know your financial situation in terms of what you have in your bank accounts, but the best option for you, not only to get it removed, is do a pay for deletion, which is basically we'll send out a letter, telling Chase to kind of work with you. If you owe $5,000, pay them 20% of the $5,000 that you owe and do it in a couple of payments. And then if they come back with you and they sign that contract, you also must state that you want it completely deleted from your account. Having it deleted is easier because, like, again, with the closed accounts, those late payments that are linked to that charged off account is hurting you. And so is the negative status of charge off. So just getting the entire thing removed is the best thing that you can do. And then doing a settlement for deletion. So it's collections, don't pay them per se, but yeah, because the law basically protects you on that aspect with the collections.
Interesting. Have you guys ever had any case go all the way to court?
So the only time
Um,
that, so we personally have never had one of our clients go to court. Like they've gone to court because they had a charge off account and the previous company that they were with or someone that they spoke to and trusted told them don't pay that account, when yes, they still legally owed that debt. So they are going to take you to court. So if you do have a charge off account, we highly recommend you settling that balance. Now, if it's a collection, the reason why we say, you don't necessarily have to pay for it and the law protects you against it, is because it's a third party owned. So what that means is that it's no longer owned by the original creditor. So the contract that you have is no longer with Chase. Now it's with Kane and Weiner, which is a collection company that we've seen a lot. So when it comes to, if it is still owned by the original creditor, yes, absolutely pay for it and make sure that, and if you can't pay the full amount, then settle for at least 20%. 20% is a great number, is usually the one that they're okay with settling with. So that's why we keep saying 20% of it. But if it goes into collections, then that's when we can start disputing, because when we dispute to the collections, we're basically asking them for proof of a contract that states that, the consumer owes that collection company. And 9 out of 10 times you do not, because the contract is not with the collection company, it's with the original creditor. So unless that they want to, sell it back to the original creditor and then you owe the original creditor, then perfect. But there is no contract with those collection companies as to why you should be paying them. So, let me just recap. The only time that, you should really be paying, and so you don't have to be going to court, is with a charge-off account, which is again owned by the original creditor. So that is when we've seen our clients go to court because they're not paying off that legally owed debt. So I hope that answers that question.
Yes, awesome. Okay, I'm pretty much done with the questions. So if anyone else wants to jump in.
We have one that says, if you have a card where payments are all on time and you want to pay off the card but still keep it open, can you ask to pay less, or is that only accepted once in collection? So if you have an open, I think I get what you mean, but if you have an open account and are you referring to your statement balance, like that you can't pay it off at the end of the month?
Yeah, so let's say I want to clear that card, just clean it out, pay the full amount. But are you able to actually negotiate how much you're paying for it, or is that only when it's in collection and you have late payment?
Yeah. So, okay, when it comes to, are you wanting to close that account, or you're just wanting to pay it off but negotiating to pay it off?
No, pay it off, negotiate, but keep it open.
Okay, so then it wouldn't really make sense to negotiate paying it off. You would just want to pay off at least the minimum balance, and I would even say pay $1 more than the minimum. For whatever reason, paying just $1 more helps you on your end. So if you have a statement balance, right, and the minimum payment is $35, I would pay $36 just to show that, okay, I may not be able to pay the full statement, but I'm able to pay a little extra. And although you may not be able to pay the full statement balance for that month, you are going to accumulate interest on it. But there's no way to negotiate that statement balance unless the only time I would say to do that is that if you're going to close the account and you can't afford to, pay off the remaining balance to close it. Does that make sense?
Okay, yes, it does.
Yeah. Okay. So yeah, just, we don't recommend paying the minimum balance only just because, you do accumulate interest. And on top of that, let's say you're already over your 30% on the spending limit. Whatever remaining balance that you have on your statement balance that you didn't pay, it's going to roll over for the following month, and it's going to be added on to whatever that current balance is. I actually have a video on this on my personal Instagram page. So which I'll drop my page on there, and under my IGTV, I explain all of that. So that's that you can definitely look at it, because I kind of give you a visual as well. It's a little difficult to like talk about it without showing you exactly what I mean. But if you did want to get more information on that, you can definitely go to my page and check it out under my IGTV. And I talk a lot more about that. Yeah, no problem.
Okay, perfect. Thank you.
You're welcome. And then yeah, I mean, our email, I put the info@suarezcredit.com. I'll also put our personal emails. You guys are more than welcome to email us, and we can answer anything that you guys would like.
Oh, I put my wrong Instagram handle.
So is that it, guys? Did you have anything else? Well, now you have our contact info. So if anything does pop up and you're like, oh crap, I forgot to ask that, you can just shoot us a text, call us, email us.
Yeah, and I put the link to our Calendly. So if any of you wanted to have like a more in-depth conversation about the credit, whether it's personal for a client, whatever it is, just kind of make an appointment with us so we can kind of block it off and we can have a longer conversation.
Yes.
All right, guys. So I guess that's it.
Thank you, guys.
Thank you all for joining.
Have an amazing day.
Bye, guys. Have a great day.
Bye. Thank you.